day, all. Ira Epstein with your financial market update, and I've got a very short time here to tell you that we're on January 9th, 2020, and we're getting on to 445. Another stellar day in the NASDAQ, the Dow, and the S&P. The question is, are they getting a bit too rich right here? Are they building in a perfect world and getting ahead of themselves? I'm also looking at metals doing the correction we talked about, the dollar up a little bit. Bonds and notes rallied today in front of tomorrow's jobs data. So let me just get the chart up before the board's clear. Now we're not going to worry about it. You know, you're going to have a lot of elements happening at you pretty fast now. You got the U.S. jobs data. Next week you got the U.S. Chinese trade deal. After that you have the USMCA deal. You've got, at some point here, Speaker of the House Pelosi is going to deliver her impeachment article. Nobody knows when. She says it's going to be soon. I have to believe her, but she doesn't have control of the Senate. The Senate controls the Senate, as it should be, and when they get it, they'll decide what they're going to do and what the rules of the trial will be. So don't get caught up in all that politics. It appears also in the marketplace that the U.S. at least isn't being involved in the Ukrainian plane crash in Tehran. It appears, and I want to use the word appears, I'm reading all the news articles about it, that a Russian-based missile launched out of Iran hit that plane. What I have to ask is, why would you let planes take off in Baghdad and you're launching missiles, if you're launching them anywhere near there, that could target that by accident? I don't get it, but I also don't know if the news is correct yet. We'll find out as under international law, a lot of people start looking at this, and Iran will probably open it up to that investigation. Whether we get the truth, can't answer it. Another 40-point gain for the week so far in the S&P. It's the market that doesn't end, but what's the date? January 9th. What did we talk about that gets deployed at the beginning of a year? Money. So there's a lot of money that's moving around. People don't realize it. I saw today that the Lipper Fund that tracks money going into the bonds and the note funds, record amount of inflow. So while we think interest rates are low and the stock market's moving higher, there are other people that are also saying, I'm going to put some money into safe, if you will, havens. Interesting what's going on. Can they all win at the same time? I don't know. But I do know that this market's pricing in that everything is rosy and perfect, and that always scares me, especially at the beginning of a year when you get a one-sided direction move. Now, you'll say it wasn't one-sided. I agree with you. Why do I agree? We did have this one day of a break, and that was, of course, had to do with what was going on with Iran. And that was the Tuesday night launch for the Wednesday action. But the market, while it dropped big, it didn't close that bad, and that's where you come in here. You know, when you look at a close only as to how the market is going week to week, it sort of smooths things out. It takes the day-to-day action away, and the market is still okay there. Now, we don't have what I call the classic trend pattern. We have a lower low and a higher high. Admittedly, this is the highest high of the whole move. I don't not recognize it. The market held on again a pullback just the way it did back here on this break, the 18-day average. And if history follows past, if the future follows past history is the way to say it, well, the market, it's moving higher, and traders are looking in that, and they're saying to themselves, darn it, every time it goes down there, it seems to offer an awful lot of support. Step back here if you can see that. Did it back here too. So I think in part that's what they're watching. What I'm looking at is the fact, and I said it today in my morning video before you people get to see this. I told my traders, be careful. The upper Bollinger Band is right in front of you. The way I teach charting, I'm expecting the pros are going to take some money off the table if that number's hit. It only got hit late in the day. Well, actually, it missed it, I want to tell you, by a half a point. That's basically hitting it. You're right there. 3277 is the number. You round it. The high today, 3276.75. It's 2 ticks, a half a point in the market. I consider that there. What about the NASDAQ? Today's, we'll stay with the S&P and then I'll come to the NASDAQ. So you're there, you're overbought. You had come here, I want to come back to this for you. Let me get back right where I want to be on this chart. Right here. You came down, made your run towards the lower Bollinger Band, came back up, Now you're knocking on the door there. And here, you can see the momentum. And I hit the wrong button, so I'm sorry about that. But you had lost the embedded reading on Monday. You kept it lost on Tuesday. Both numbers were not over 80. That's all I care about. You cannot get it back unless you now get 3 days in a row of both numbers over 80. So today you make a run, you put one number of the slow stochastic over 80, not the other. You're just overbought. You're overbought, knocking on the door of resistance. That's how I'd analyze the chart. In the NASDAQ, you kept the embedded reading. We have talked about that. Now, yesterday you made a run in the market. You got up as high as 89.72 and a quarter. The Bollinger Band top was 89.69.95. Let's call it 89.70. So you hit the band. Today you're extending the band, but the difference here is you have the embedded reading. So the pros that bought this number, at least they had they had momentum on their side. You didn't have it on the S&P. When I come to the Dow, let's go to yesterday. Yesterday, you had come back off the lower band. The resistance to me is wherever the upper Bollinger Band comes in this morning. That was this morning, not tonight. And you take a look. That band, you hit it at the end of the day, and that's great. But the odds of staying over a Bollinger Band, 5% of the time, which is another way of saying 95% of the time, it won't stay over it. This market likes to stay within the bands. I don't care if it goes higher. I think the smart money today was backing out of some of their futures positions. What about the Russell? In the Russell, we've had a correction to the downside in momentum. It's now flattened itself. It met a target with hitting the lower Bollinger Band. I think the pros came out there, then you started coming up. If you rally here, I think the pros are going to bail at the upper band. So whatever they're doing back and forth, I don't see a trend. I see a lower low, a higher high. It doesn't have the embedded reading. If the cash VIX gets down to 11.5, I think the pros are going to write puts. They'll try to get back to the 18-day average. Now, some people use the futures. I realize that. They can go any way they want to go with it. I'm just telling you what I think will happen there, because this market likes to stay within the bands, and they get more aggressive on breaks in this market because it's harder to get from 11 to 8 than it is from 11 to 20. It's just the way that it works. It's easier to go up with the risk than keep taking risk premium out of the market. In the bond market, you went back yesterday to the 18-day average, today the same, and you're just holding that number. You closed right over the 18-day average. Yesterday's rally, you got up on the fear factor over the Bollinger Band, but I'm going to repeat it. I think when you hit these Bollinger Bands, you got to be careful here. And the 100-day average combination is one of my favorites, where I tell people, I think the pros are coming out because that's over the market. Now, if it's under, I'm a buyer in looking for the pros to come out of shorts. In this case, out of longs. But getting to that 18-day average, remember, that's the number that I think it's the line in the sand where everybody tries to figure out what to do. With tomorrow's jobs data, they're going to look hard at that. We saw good ADP numbers. We're thinking we're going to see good jobs data numbers tomorrow too. But why would you rally then? If you're good, maybe this was just holding that number, not setting anything up. Are we trending? No. You got a higher high, a lower low. 10-year notes, are you trending? Nope. Yesterday, this is what you looked like. You went up, hit these numbers, and then you went right back through this low. So you had a higher high, a lower low. That's not a trend. If the market wants to break further, the first support, my line in the sand, is the 18-day average of closes. You went right to that number today at 128.19. I told my traders this morning about that, and now it's holding. It's not trending. I'm not giving you an idea that it's trending. I think it's caught between these bands, and yes, you had that excessive move, but by the end of the day, it paid attention to it. When we come to TLT, look at your line in the sand. You're stuck there, and you're stuck in narrow Bollinger Bands. You just haven't come out of this, nor are you trending. You got a higher high and a lower low, and that's what I look at. Then we come to the dollar index, which answered yesterday that it had come out of its downtrend. This was the market. Prior to this, you had lower highs and you had lower lows. With the action that happened yesterday, and then the follow-through action. Well, this market really yesterday said, okay, if I'm good, I'm going to hold this 18-day average. Maybe, I can't answer it's going to do it, because momentum is up, the swing line is up, the bias up since you're over the 18-day average. Maybe you put into play these numbers, and the market's sort of reaching into that area, as you can see. In the euro, it was the flip-flop. You closed yesterday. Here you are. This is the close on Wednesday, underneath. So if you're going to put a bottom area in, or a target area, and the bottom's the wrong area, a target area is the right vernacular, it could be the lower Bollinger Band. You're sort of reaching for that. You're already very oversold. When you're already very oversold and you've made a big move, I don't know if you're going to get to that number, but the bears are in control. Resistance is likely going to be the 117.38 to the 118, the 111.98 zone, the 18-day average. It's a wide swinging market, but in a downtrend, gotten oversold already. British pound. Today the market said, okay, I'm bearish. Now, let's explain what I mean. Yesterday you went home, lower highs, higher lows. Today you reached down, you took out 130.79. Now it's interesting that it broke on the fact or two that the House of Commons voted today for the Brexit deal by January 31st, and now it goes to the House of Lords, the bill. It'll be an automatic passage, and we get the Brexit deal in play. That doesn't mean a deal with Europe is done. That just simply means Brexit, what Theresa May couldn't get done, is going to be done. Now it moves on to a deal, if you will, with the European Union and other countries, but it opens the door for a US-UK deal as well. So we're looking at that, but the market slipped. So resistance, 131.41. The risk to the bears, well, you wouldn't want to see 132.36 taken out. But even if you did, you can't turn the trend up. The fact that you'd have a lower low here, if you just went straight up, you'd have a lower low and a higher high. The bears have control. Their job is to defend the 18-day average of closes and try to drive the market even lower. In the end, the market, this was the rally of safe haven. It went just like we saw in another market here, where you went up to the combination of the Bollinger Band, I think it was the bond market, the 100-day average, it let go, and it's followed suit today to the downside, as traders are just saying, what do I need a safe haven for? The U.S. stock market's running. President Trump and Iran seem to have reached a point where they're not firing at each other right now. It could be the proxies, but it isn't that. And the president said more sanctions went on today. I don't know what those are, but it's just going to be more hardship for Iran. But while he puts the sanctions on, he holds out the olive branch and he's asking the whole world to get involved. Let's get rid of this nuclear program and get Iran out of the mischief. From their point of view, the Iranians, I'm sure it's a very different. We're terrible and whatever it is. You know, people have different points of view. You can't just read American newspapers. You never quite get everything. I try to read a lot of different elements. But oversold, can you reach down here? Just like I was talking in the euro. Maybe, but you're not trending. So unlike the euro, that's a little different. Bitcoin, no surprise, you pulled back under the Bollinger Band. Okay, you only stay out of it, 5% of the time. That doesn't mean you can't find support between here and the 18-day average. You're overbought. Market's in a corrective mode right now. And remember, people that are buying this are looking down the road. I think it's in May when the halving takes place and there's going to be less Bitcoins, because that's how this thing is built. It's built that when there's a certain amount of coins out there, less coins can be built. And that's the algos and everything behind this. And people are trying to, build value, because the last time it happened, the market soared. They're in their own world in that. In the Brent versus WTI crude, it's still holding pretty much the premium. It's going to be hard to take that premium away from this in a time when the U.S. has not reached any real agreement with Iran. We stepped back from the brink, but I wouldn't say that we're any friendlier. If you think that, I think there's something seriously wrong. So we're always that trigger away from something happening with oil. But oil on itself peaked out yesterday. Yeah, I'm using the word peaked out. How are you going to get back up over $72 unless some event happens again? World demand for it right away? I don't think so. I don't think that's going to do it. And we have a lot of supply. At these prices that came out, there's a lot of hedging, and you can certainly turn on the spigots if you want. You got Norwegian oil, new fields coming on, got a lot of other producers. I don't think the U.S., even with CapEx restraints, is going to, if you will, become less of a producer. We probably won't grow as much. There's a difference. And this market to me looks high, but, the word is but. At what point do you say, okay, this market's down enough? Yesterday, the market was down 4%. Today, the market's added another 0.1. So you probably got overall, from the high to the low, quite a decline, maybe 7-8% here or more. I get nervous when that happens. If it wants to extend, 63.5 to the 60 level, but that's really pushing it to the downside. WTI crude got right to the Bollinger Band. What do you think I'd tell you if you were in the oil business? I'd say this is where I think you're going to see some short covering. I don't care if I'm right or wrong. I'll play the percentages. First challenge of that is often the case. I can see it trying to consolidate this break, but I don't see it accelerating it. Gasoline, same darn thing. It hit it yesterday, hit it again today. You're not getting through it. You're oversold. That does not mean I'm bullish. There's a difference between taking money off the table if you're short and getting bullish at that price. And in that gas, as I said, I just don't like the setup just yet. You got lower high, higher low now. You haven't had one more cold spell. It's got to come. It's wintertime. When it comes, that gets to be the interesting part when you knock out some of the shorts that are in this market and you get to have a more interesting marketplace. As you can see, we've reopened in the markets. We're after 5 o'clock. So this is neat because I'm able to show you how the reopening is going. The metal markets are basically steady to lower, and you're pretty flat right now in the bonds and the notes. So nothing big is moving as we finish this up. Want to remind you that my metal report is out. I put it out yesterday. It's only up 5 days. And after that, you're not going to be able to see it. So if you're interested in looking at it, go to the website, www.iraepstein.com, under the word research. Now, if you're a paid subscriber to any of my research products, if you're a trading account of ours, all my reports are free to you. It's that simple. So when I put out a special report, be it on metals, the currencies, the energies, whatever I feel like doing, that's it. For other people, we put a limitation as to how many free ones you can see, and then you can either pay by the report, and it's a small amount, or you can decide to join us in one of those other ways. There's a lot of effort that goes into this, and if you're a regular viewer, I think you know that. In the meantime, I'm Ira. You have a good day, and I'll talk to you tomorrow. And by the way, your ETF spider reports, I expect to be releasing to current subscribers of mine a trial to them where you get to see what I'm doing, and that could happen early next week. That's how far along we are. You have a good day.